The Republicans in the House of Representatives have submitted a bill that would abolish the IRS and eliminate federal income tax.
Republican-led House will vote on a bill to abolish the IRS.
Now, a partisan battle is taking shape over funding for the IRS.
To slash funding for the IRS. The GOP's inaugural bill would cut roughly $70 billion.
Before we start jumping for joy, that doesn't mean we won't pay any taxes. The chances of this bill passing are as good as your odds of finding a quality steak in a gas station. Even if the bill were to pass, the federal income tax would simply be replaced by a consumption tax. It's not rare for our government to experiment with the ways they tax us. Back when we were just meager little colonies, all 13 of us, they levied all kinds of taxes on us. We were taxed on goods, real estate, and they even had a head tax, which is essentially just every person pays X number of dollars just for being a citizen. After the Revolutionary War, our government had the right to tax us, but at first they just taxed goods, alcohol, tobacco, etc. It wasn't until the Civil War in 1861 that the first income tax was actually levied in the US, and this was obviously to fund the war efforts. What was the tax? A 3% flat tax on income over $800. Then, after the Civil War, 1872, this flat tax was rescinded. And the government actually tried to keep implementing more income taxes, but interestingly, the Supreme Court would continue to strike it down. Americans didn't see another income tax until 1913, when it was actually added as an amendment to our Constitution. What were the tax rates? Well, the highest marginal tax rate in 1913 was 7%, and that was for income over $500,000. That is almost 15 million in today's dollars. But even more extraordinarily, in 5 years, the top marginal tax rate exploded to over 77%. Why are politicians, debating how we're taxed at this time? Well, it turns out that this bill actually made it into consideration, part of the drawn-out saga that was the election of Kevin McCarthy to House Speaker last week. If you didn't catch it, it took 15 voting rounds to finally get him elected to the position. And as they say, if you don't succeed, try, 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 again. And that he did. He stuck to it. He got the position. Regardless of how you feel of the old barter system, this is how politics works, right? So one of the key reasons McCarthy was finally able to come up with the votes that he needed was that he promised Freedom Caucus members that they could submit this Fair Tax Act, the one that would abolish the IRS, for vote once he was elected Speaker of the House. The Freedom Caucus, as the name probably suggests, is made up of the most conservative politicians in our country. And a caucus, in case you don't know, is basically like a clique in high school, right? You got your jocks, your nerds, your theater kids, and the Freedom Caucus has people who want to see less government intervention overall. And essentially, they meet periodically to discuss their common agenda. Now, on this channel, we only care about truth and money. So as we steer away from any sort of political opinions, let's be clear about what legislation we're talking about. The Fair Tax Act, which would abolish the IRS, should not be confused with the Family and Small Business Taxpayer Protection Act, which is the one that just passed in the House of Representatives last week. This act aims to rescind the nearly $80 billion in funding that was allocated to the IRS back in August of 2022 as part of the Inflation Reduction Act. All right, can I pause? These names of the political acts, I mean, they're just like the cheesiest infomercials, man. Anyway, I digress. Technically, the generous IRS funding of $80 billion might be the only part of the Inflation Reduction Act that would actually curtail inflation, because the 87,000 new agents they're going to hire are going to be taking money from your pocket and out of circulation. It's one way of handling it. The $80 billion in IRS funding that the House has already voted to rescind looks like it will actually go on as planned because they don't have enough votes in the Democratic-controlled Senate, And the White House and President Biden have already expressed their approval of the funding and actually came out today and said he would veto it. Now that we've cleared up the 3 different political acts, what would abolishing the IRS even look like? What would be a consumption tax, and would it work? A consumption tax, as it sounds, is a tax levied when you consume, or in other words, the sales tax that you're used to seeing at the stores, right? You buy a car, you're taxed. You buy a new laptop, you're taxed. You buy a nice sirloin steak, most of the time you're taxed, but some states don't tax food. Pretty cool. Now, there's a few ways that this tax could be implemented, but the most common is just through a larger sales tax like you're used to seeing in your local state taxes. In Europe, they call it a value-added tax. You'll see a VAT. But one major distinction is this extra sales tax of theirs is just that. It's extra in addition to their federal income tax. The most obvious blueprint that we could look at to see how this plays out is how the U.S. states currently handle it with their own sales tax. But right off the bat, there's some complications. First, most states don't include a sales tax on basic life necessities like food, medicine, or housing. But the problem is that represents nearly 32% of the average household spending. So as you can see, there's a dilemma. If the government's trying to keep roughly the same amount of tax revenue, then they're left with a choice of either penalizing all people, whether poor or rich, for purchasing life necessities, or your government is left presumably less revenue. However, one of the biggest issues that's been debated about this change to consumption tax would actually be how it affects the seniors in our society who've been saving their whole life for retirement. Why? Well, their whole life, they've already been taxed. And this whole time, they've saved up money, let's say in a 401k or an IRA, they have $1 million saved up, and they're going to retire. Well, they do their math, and they think that's enough. But now they come into retirement, and the goods that they're going to buy now have a huge sales tax added to them. How big? We're not just talking about a little 5% extra tax here. The Brookings Institute has estimated that it would need to be a 60% sales tax to make the equivalent of what the government receives in income tax. So, as you can see, if you're a retiree and now that $1 million you had saved up ain't gonna last you that long if all the goods you're buying are 60% more expensive. Now, there could presumably be some workarounds, such as tax deductions for retirees, but either way, you're going to be hurting people who have already been taxed on their income previously. That is, unless you were to refund people all of the income taxes they've ever paid. But now you're just entering fantasy land, and I don't think the government would ever consider doing it, and I do not have faith that they could actually manage pulling it off. Another major problem is its outsized effect on low-income families, right? Currently, low-income families pay little to no income tax, but if a consumption tax were to be implemented, now they're paying additional taxes on things they have to buy. And inherently, this would hurt them worse than high-income families who don't spend as much of the income they earn. You could track their payments and reimburse them, or even give them cash disbursements to compensate for the increase in taxes, but again, you're just adding more responsibilities, more hurdles to the implementation. Perhaps the most notable issue that the consumption tax would have on America would be the question as to how it affects the psyche of the American consumer. After all, this is America, right? And all we do is consume, whether it's cars, content, calories. It's perhaps America's crowning achievement. We've created the most wealth in human history, driven primarily by our push for consumption. One sort of red flag example might be the fact that in OECD countries, which is just basically most of the modern countries out there, they levy consumption taxes, and they make up about 32.3% of the tax revenues that they collect. And the US federal government is zero. Sure, we have it at the state level, but federally it is zero. And it begs the question, could this be one of the reasons that America, one of the many contributing reasons that America has outpaced all these countries in economic growth? So what would happen to this American principle of consumption if we were to penalize spending and reward saving? Well, first, you would undoubtedly see a drop in demand for all products, but especially the products that aren't necessities, right? And this would obviously hurt businesses and subsequently hurt all Americans, as we're all employees of these businesses for the most part. But, the first argument that jumps to mind would be, well, let's say demand dropped by 40%, so you have 40% less in revenue. But if your income is tax-free, a business might actually break even, because typically when you add up all the different taxes, their tax rate is about 40%, 40 to 50% in some cases. However, that's not the entire picture, because now this business owner takes their lower income that they have, and they have to go buy goods that are now taxed at an extremely high rate, and therefore their income doesn't go as far. So overall, yes, they would be worse off. Well, what about the benefit of creating more savers and hopefully more fiscally responsible consumers that would make Dave Ramsey proud? Well, some have actually argued that it could not only maybe have the opposite effect, but at least a neutral effect on the savings of citizens. Their reasoning is there would essentially be no more role for the government to be able to protect people from themselves. What do I mean? Well, currently the government incentivizes saving by offering tax benefits to employees who contribute to 401ks or IRAs. Then they essentially lock up the funds till they're 59 and a half, where people can then start actually drawing from these savings. If there's no more income tax or capital gains taxes for that matter, there's now no benefit to a 401k or IRA, so people will be at their own discretion of having to manage their savings for retirement. And without getting into the moral argument of whether or not we should have 100% control over, our savings and our future, without sounding too corny, this new situation would benefit some people like me who want to manage all their own savings and have complete control over what I want to invest in. But as some argue, this would undoubtedly backfire for some individuals who either, don't have the knowledge of how to, handle their savings and make smart investments, or those who just lack the self-discipline to do so. If you're still with me and you're tracking all the pros and cons of switching to a consumption tax, I want you to leave with two things. One, this will likely never happen, but we have to stay up to date on these issues and debates, because oftentimes we dismiss things as improbable that end up happening, and you'd rather be prepared than caught with your pants down. Number two, no matter which way the government decides to tax you, it's gonna suck. And, there's gonna be certain groups of people that benefit more than others from certain tax structures, and every tribe is going to root for the structure that benefits them, right? Real estate investors are going to hope for more depreciation benefits. Stock investors are hoping for less capital gains. And, the average middle-class family is probably just hoping for a smaller income tax as a whole. But at the end of the day, all self-interested citizens care about is for an overall reduction in the amount of tax that is levied on them, and not how these taxes are levied. Here's a toast to all you struggling with your taxes this season and having that April 15th date loom. I hope you get the courage to get through it. File those taxes. Don't go to jail. Remember to hit the subscribe button on this YouTube channel, and also subscribe to my free email newsletter. The link is in the bio.